This could be the most important Bitcoin chart you have ever seen. Just
Josh, what you see here is a graph showing Tether's market cap. What's interesting is that you see the shrinking in the market cap. Notice these stair step redemptions right here. Stepping down, stepping down, stepping down, and stepping down. My guess is that this means that people are redeeming their tethers, or authorized participants are redeeming their tethers for Tether's underlying collateral. If you're a big name, think like an Alameda Research, for example, you probably have the right to go to Tether and say, hey, Tether, listen, we have $1 billion worth of Tether, and for every odd reason, we don't want to have the Tether anymore. We want the dollars, we want the treasuries, whatever. We want the collateral. And so in the process of redeeming, again, numbers out on my backside, $1 billion worth of Tether, you'll get $1 billion worth of collateral. So when you see these stair steps down versus a curve going down, I don't know what's causing it. But Josh, my guess is these are people who have the ability, so big players saying, Tether, here are Tethers back, or here are, billions of dollars of Tethers at a time. Please give us the collateral.
And we just saw Tether break the buck the other day. Tether's a stablecoin where they're supposed to be backed one-to-one to U.S. Treasuries, but they've come out and said that, you know what, we're actually not backed one-to-one to U.S. Treasuries. We also hold corporate debt. We hold various assets, a bunch of jargon. If you don't follow it too closely, they could be running this massive Ponzi scheme. They could even be holding Bitcoin and pledging that as a apparent one-to-one in their Tether market cap. The thing that's interesting now is that there's a big player now starting to liquidate their Tether. The reason this is important because a lot of the volume, like 70%, I don't know if that's doing it justice, of the volume in Bitcoin is actually just Tether being traded back and forth. So if you didn't have that volume, there's going to be a mass liquidation, apparently just probably a very low bid down. A lot of people say, well, if Tether goes bust, people won't be able to sell, but they also won't be able to buy. And the big players in the game, they need big chunks of money and volume to get their transactions through. I'm sure that you've seen videos on Tether before and you're sure that's a scam. The reason why this is so important is because these big chunks, this is a big player starting to liquidate their Tether. What else could this mean for not just the price of Bitcoin, but Tether itself, Justin?
Josh, imagine how many pairs are set up against USDT, both on centralized exchanges and decentralized exchanges. Tether's market cap, as of this video, is $75 billion and change. Many people think, oh, well, let's just say Tether suddenly goes to zero or goes bust or whatever, right? Well, that's only $75 billion that's going to be shaved off. And the answer is no, not quite. Velocity is what you want to look at. It's not $75 billion worth of Tether. It's how many times do Tethers, on average, turn over in trading pairs in a given period of time. So just, again, numbers on my backside here. Let's say Tethers turn over on average of 10 times a day or whatever, right? Just on average. That actually means that $75 billion is actually $750 billion. It is what it's supporting in various trades. And again, just go to Binance, go to any decentralized exchange, and look at all the pairs that are set up against USDT and whatever the other coin is. And then think back to what happened this past week with Luna when UST, not to be confused with USDT, collapsed. You basically saw Bitcoin's a good example because it finally hit 100,000. And when as the price of UST was falling, BTC was rising in regards to that. But the point is that like all these pools that hold USDT, they're going to dump the USDT to scramble to grab whatever their pair is: Bitcoin, Stellar, ETH, you name it. You put money in Bitcoin. Bitcoin's going to go up. Bitcoin's going to go down. You kind of like that's baked into the cake. But if you tether up or go to USDC or some other stable coin, the reason you're doing that is because you want to get out of risk, which means it's a confidence play. The reason you're going to whatever you're going to get out of risk is because you are confident that there is less risk there, particularly if a coin maintains to be stable with a dollar or whatever you have. And so it's not so much just like Tether going down is going to implode the system. It certainly will, but it's the attack on the confidence. It's to say, well, wait a minute, not only are the trading pairs going to have to be, rebalanced and redone, and like, to be clear, cryptos will survive without Tether. I'm not trying to say Tether is going to drag down the entire space. But in the process of Tether crashing, a lot of people have sought safety in going to Tether. And a lot of the trading pairs in the market also revolve around Tether. So when these two things blow up, it's like you've got two of these major... You've got two attack vectors in crypto space. One, the confidence of a stable coin. And the second is the built-in trading pairs. Now, both of these can come back in time. But again, look at what happened when Luna, which was nowhere near the size of Tether, or I should say UST, blew up, which was nowhere near the size of Tether. And look at the effect it had on the market. I mean, Josh, Bitcoin bottomed at 27,000 or so from UST, just UST. just UST in this
Yeah,
regard.
once Tether comes out that it is a scam, because I'm sure everyone can probably agree that it is a scam. Even the maxis, they know this. The maxis are fine because they hold all their stuff in hard wallets. It's the people who are just buying Bitcoin to get rich. We're the long-term philosophical maxis on the philosophical beliefs of Bitcoin. That doesn't mean we're holding any right now, because I'm personally very bearish on the price because of what we're talking about. When you see signs of actual liquidation of Tether, that is the big players saying, I don't want to be in this anymore. We see them breaking the buck. I think those trends are going to continue. If Tether does blow up, that is going to not just have catastrophic effects on the crypto market, which is extremely over leveraged. There'll be a lot of people getting margin calls once we get down to 20,000. MicroStrategy, of course, going further down. I'm not just concerned with the crypto space, because how much leverage is being put up as collateral for on other various portfolios. We talk about a lot about GME here. What is the time from crypto to GME? If crypto, I would be very, very interested to see what happens to the price of GME. If I think personally, if we do start to see a spiraling out of control crypto market, I think that would be in a correlation to a upward spiraling GME market. That is, of course, I have a biased view. I just think there's a lot of cross currents here, and watching crypto could be one of the first things to fall, and that could be one of the first things that causes a real spike.
Josh, compare NASDAQ to the price of Bitcoin and look at the correlation that's there. And so I don't know if one's leading the other. I don't know if both are leading the other. So I don't know which way the correlation goes, or if it goes both ways. But here's the thing, like if you have something that blew up in crypto, so like think back into last week of how low we got on the markets too. Like I don't know what's going on here, but Josh, I get the feeling that there are a lot of connections, a lot of these emergent properties, a lot of these hidden linkages. When people think that there should not be a linkage there, that actually does exist. And that's going to be something I think that's going to get us all into a lot of trouble if we don't hedge ourselves accordingly. There's two things that get you into trouble, right, Josh? What you don't know, and what you do know that just ain't so.